Monday. I'm in a model home on a hotspot. So, Mark, if I go out, just go with it.
Okay, no pressure.
I think we'll be fine. How are you?
I'm good. Good. Just had a nice, relaxing weekend at the lake and ready to be back at it.
Get at it. So, I've got some fun conversations. And why wait? Let's dive into this.
Cool.
Um, so, there's a website, Mark, called Mortgage News Daily.
Hmm.
And this website and Bankrate are kind of the two websites I just kind of click on to kind of get a generality of what's going on in rates and mortgage,
Right.
and they're two trusted sources. Um, I pulled this up over the weekend, and it looks different than it's looked in the past. What do you see?
Well, I see that there are actually 15 years and 30-year FHAs in the sixes. So
Yeah,
that's nice.
there's a six on this thing that hadn't been on it in a while. So
Exactly.
is that news? Is that newsworthy? What do you think?
Yeah, I mean, the past couple weeks, rates have been dropping down for about the past 2 weeks, and they mention it on the news, but they make a much bigger deal when they're high. So,
Yeah, of course. So I see this as kind of encouraging for
mm,
our conversation today because um, when you're looking and investing, you're trying to understand economics. You're always looking for the top of the mountain and the bottom of the valley, right? And we've been waiting on this bottom of this economic valley to happen so we can get towards some kind of a recovery perspective.
mhm.
Um, and I kind of feel like it's pretty close to it, Mark, to be honest. And
Yeah,
this is just one of those signals. But I also think, we went through a period of time where multiple offers, you didn't talk about FHA loans, you didn't talk about VA loans, you were
right.
only in this top section, the fixed category, because that's all sellers felt like were strong offers, right? But I think some of those products are going to start to come back. And if you just look at now, granted, FHA has a loan limit, VA has loan limits. I get that. If you're above those
And
loan
funding
limits,
fees and stuff like that.
yeah, yeah. So obviously, you got to look at the full picture. But if I'm just looking at a comparison right now between a 30-year fixed and a 30-year FHA, maybe I'm having a conversation I didn't have 2 years ago,
For sure.
and that could benefit from an affordability standpoint.
Well, and more importantly, sellers, we need to be making sure we're educating our sellers that these are viable options. And, there was a time when, if it wasn't a cash offer, we didn't go with it. And if it wasn't, if there was no cash offer, it had to be conventional to go with it. But there's really no reason to not go with an FHA or VA loan buyer as long as the property is going to meet habitability standards.
100%, 100%. Um, I want to run over to something else real quick, Mark. Last week I had a presentation with the head economist of NAR, and there's a couple slides I wanted to show you. This being the first one. So, what this is home sales graph since 2017, and you see the dark blue line in the middle, and the dark blue line is when COVID happened.
Hmm.
So, to the left of the blue line, I mean, it bounces around as most lines do, but it more or less looks stable compared to the right. And the right is what home sales look like post COVID. And
Right.
it almost looks like a heartbeat that's out of line on the right, where the heartbeat was beating in line on the left, right? You could
Hmm.
make that statement. So the thing that he pointed out was if you look at this point on the graph in July 2023,
Hmm.
compared to what the points on the graph pre-COVID, we're selling less homes than we did before the COVID,
Right.
before the pandemic, which I think we knew that, but to see it on a graph like this kind of gives you a little bit of a shock factor, right? Like,
Yeah.
oh, wait, huh?
Yeah.
Now, if you just looked at that graph, that might be negative news. So hang tight. Let's keep telling the story.
Right, because this is existing home sales, right?
This is existing home sales. And the next line shows new construction. So here's COVID, regular heartbeat, irregular heartbeat. But the point of this is if you look at this point on the graph in August 23,
Hmm.
it's actually higher than what the new construction sales were
Hmm.
pre-COVID. So we've been talking about this on this call for a while. Like new construction's a big deal. Yes, proximity to downtown Atlanta and new construction is that there's that conversation. Yet,
Sure.
um, I think no matter where you sell real estate in Atlanta, new construction becomes a part of your business at some point, right? Or there's
Sure.
some facet of it. Um, but it just kind of gives me encouragement and thought around uh, the fact that inventory is coming, if that makes sense. What do you think?
Right. Yeah. Yeah. I mean, I think builders and developers were encouraged by the extreme demand that was shown through COVID. So they've, stepped on the gas when it comes to um, building and creating product where they may have been holding on to some land that, they were waiting for the right time to actually start building on. So it seems like they've pulled the trigger on a lot of those properties and are now starting to build them out.
Absolutely. He put this graph up, and this is total new and existing. And these are nationwide stats. But from the peak of 2021, there was a 20% reduction in home sales in 22, and there was a
Hmm.
20% reduction in home sales in 23. Yet he's predicting a 15% increase next year
Mm.
from
So
this year.
it looks
So
like
we should,
2024 will be a lot like 2022.
yeah. So now I granted if we were down 20 and up 15, it's probably going to be a little bit less than 22. But remember, I'm looking for the valley. I want to see where the bottom is and where it starts to turn. And
Hmm.
it sure looks like 2023 might be perceived as the valley of this economic cycle we just went through.
Yeah.
And the recovery starts next year. If interest rates come down from an 8 into the high sixes, if home sales go up 15%, I feel pretty optimistic about that forecast. What about you?
Yeah, absolutely. And I don't know if you have the slide there where Lawrence Young, the economist from NAR, looks at what they're predicting with rates for next
This
year.
one?
Yeah, yeah. There's another one I saw that has kind of where they expect rates to be, by the end of next year, and it was, high sixes um, by the end of next year. So that to me is very encouraging.
Yeah, I'll see if I can find it real quick. But nonetheless, we won't waste time on it. I just think it's a fun conversation when you're preaching optimism.
Yeah, yeah,
Meaning they're giving us some really good hope to hold on to that, hey, mortgage rates are going to come down, home sales are going to go up,
right,
prices are going to go up. We still have affordability issues and we still have supply issues.
right.
Um, but I feel really positive around where our industry is going right now.
It's also just re-encouraging buyers who may have been waiting that look, the rates are going to come down significantly over the next couple of years. So don't wait, buy now while you can still afford the property and refinance because the rates will come down.
Yeah, for sure. And we're already seeing it. We're already seeing it. You got those FHAs in the high sixes now.
Yeah,
And I didn't realize there was as big of a spread between the 15-year and the 30-year, but there was a pretty significant difference in spread.
yeah, yeah. And there are a lot of people out there that can't afford a 15-year mortgage because it's not that much more cash wise, but it certainly saves them a whole lot of money over the life of the mortgage.
100%. All right. Well, let's get to the numbers, Mark. Let
Cool.
me pull these up. Oh, look at that. It's going to make me log in. How dare
Should talk to whoever built this system.
it? All right. All right. Fulton County. We are expecting the numbers to be down a little bit. Like we're in a lull period of the year.
Hmm.
So as before we even look at these numbers, you're kind of expecting them to um be down one because it's fourth quarter, November to middle of the month three. Um, it's just kind of an interesting thing. But let me
Hmm.
get down here to the actual graph here, Mark. All right, so active inventory is at 744. If you're just looking at the perspective, that's pretty healthy.
Hmm.
Active under contract 119, perspective healthy, pending 246, perspective pretty healthy. Closed 202, perspective a little bit down.
Hmm.
Now, if I go back to middle of October, there was a lull in the middle of the month. If I
Hmm.
go back to the middle of September, there was a little bit of a lull in the middle of the month. So we
Right.
expect that lull, right?
Yeah, we
It's
usually have a
definitely
big,
down a little bit. And
yeah, we usually have a
yeah,
big influx of closings the end of the month and, which also show up the following week.
yeah, yeah. So we'll hold on to it. DeKalb County, little spinning wheel. What's the feeling? Like Martin agents or they're asking you, hey, what are your thoughts around the market? What are your thoughts around uh, interest rates? Like, what are the questions that are actually making their way to your office?
Yeah, I mean, I think people are just, everyone wants to know what the future holds, right? Everyone thinks that there's a crystal ball that someone has access to and they're trying to find it. And the reality is there is no crystal ball, but we can look at, forecasts by industry experts like Lawrence Yun from NAR and Fannie Mae and Freddie Mac and all the info they put out. And I think the consensus is that, I think this time of year right now is we're at the bottom of the season, but we're also at the bottom of the rate hikes. So I think as long as the Fed behaves the way everyone is expecting it to, which is to not make any additional increases in the next short period of time, then we feel like next year the rates are going to be better, and that's going to bring more people into the market as far as buyers and sellers go.
May I ask a question?
Yeah. To that, you may.
So, um, it seems like the beginning of the year was NAR and others were predicting that by the end of this summer, 2023, the rates would drop into the fives. And
Yep.
is that right? And then instead of dropping,
I
they went
think there
the
were
other.
quite a few entities. Yeah. There were quite a few entities that were predicting things. And then you got to realize there's two big factors in there that they couldn't predict. One was wars on two different fronts, and the other one was inflation uh, didn't come down the way they expected it to. So to predict a mortgage rate is a really tough thing to do because there's so many other factors that go into that equation before mortgage rates get priced that that are a little bit out of economics control. So yeah, they're actually predicting between 6 and 7 by early spring. But who's to say a third war doesn't pop up and change that conversation, or some other economic factor that comes into it? I don't think so. Uh, you're right. Their predictions haven't always held true, Terry. But uh, the feeling is that we're at the bottom, and we don't see interest rates going higher. Lawrence said on Thursday, he said he believes the Fed's done cranking rates. I
Okay,
don't know
so
that
this,
I 100% believe that, but he believes they are.
so absolutely things go sideways that, cannot be anticipated. So my question for you guys is, um, do, is there do we have a reason now? I guess you said it feels like we're at the end of the interest rate hikes, but no guarantees. Is there any other reason? Is there any reason that we feel we're more likely to continue on this trend of the rates easing down than we were for this year?
I think it's the other economic indicators, like the jobs numbers are like the number of unemployed people is going up, which is not great for the economy, but that's great for interest rates because that shows that the economy is slowing down. So like indicators like that are sort of leading people to believe that the economy is slowing enough that they can stop putting the upward pressure on the Fed rate. But more importantly, I think if you take interest rates out completely, since we don't know what they're going to do, look at prices. And prices are continuing to go up, 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 up. So for me, we know at some point rates go up and down, up and down, up and down. But we also see where prices are going. And if prices continue to increase, then it just makes sense for people to buy sooner than later and then refinance when it's possible. But in the meantime, don't miss out on the appreciation because it's getting harder and harder for you to afford that. And if rates go up, then you've got a more expensive property at a higher rate. So you're getting further from home ownership.
Yep.
Absolutely. So one question I would have is, it seems like new construction is, offering a lot of deals. And I wonder if anybody else feels this way. It just depends on what segment of the market you're active in, what area. It depends, right? And price range. But it seems like the resales are having a lot of price adjustments while the new construction is offering so many goodies. Or if someone having a different.
And maybe, yeah. So Terry, I'll summarize that question with the two graphs I showed earlier, and then we need to move on.
Okay.
You noticed resale is down pre-COVID levels of home sales, and new construction is up compared to pre-COVID levels. So we're not talking apples to apples here. The new construction's thriving right now where resale's hurting. So of course, resale, if they're hurting, is going to have to reduce price to get the property to move, where new construction's thriving, so they're in abundance and they're offering some extra incentives to move inventory.
You're right. Those charts tell what I just said. Never mind.
There you go. You're good. All right, moving on. All right, so DeKalb County's got 404 active inventory, 65 under contract. Perspective, pretty normal. Inventory perspective, a little low. Pendings is 143, looks pretty normal. Closings 140. I'll take it like that. There's not a lull going on in the middle of the month in DeKalb. It's pretty consistent, give or take 10, 15 units of what it's been doing. If I run out to Cobb County, our other third big county that we play with, I'll let that load. But Mark, you've been in real estate a long time. I've been in real estate a long time. I think it's safe to say we're in a market we've never seen before.
Absolutely.
And I say that lovingly, like I want to feel like it's something I've lived before, but it's not. It's just different.
Well, I think what we've lived before is change, right? Like the market changes consistently and it goes up, the market goes up and goes down, rates go up and go down. And there's always some new storm on the horizon that we have to deal with. And it's not an industry that's static, So I think we just, what feels familiar to me is the need to always watch what's happening and where it's going and adapt to that new market. So I think right now is no different. No, I think we lost Brett. He's frozen. So
by the way, would you mind putting a link to those charts with the new construction and the resale that we had? I mean, that we had at the beginning. Put a link in the chat. That would be awesome.
Yeah. Okay. I'll have Brett do that because the only version I have is the full version. I know not all of it is public information. because it's from a bigger presentation that he was at. So
Okay.
I'll ask him to make sure he gets those in the chat there.
Thanks.
I wanted to also just respond to you, Terry, as far as like the new construction thing. And this time of year, it's very typical for builders to offer incentives if they have standing inventory, because they have incentives out there to close things by the end of the year, because they're trying to get as much off of their books before the end of the year so that they can get those sold and go into the new year with holding less inventory. Because the quicker they can sell a home, the quicker they can stop paying the carrying costs on those. So that's just a typical thing you see this time of year, and it's a business decision. Whereas, price reductions tend to be more frustrated sellers, emotional decisions. But builders make business decisions, so they make the decision on the front end to offer incentives to hit their targets. So this is just kind of an interesting point of year right now.
Yep. Can you hear me, Mark?
Yep, you're back.
All right. So, Inman article: NAR president addresses realtors for the first time since the sit-serve verdict. If you've been living under a rock, there's a legal suit around the way buyer agent commissions are paid, all that stuff. We're not going to go into the details of that. Here's what I would tell you. There's a couple things you need to know about this. One, the industry did lose the lawsuit. I think Keller Williams announced last week that they have hired this super high profile attorney that has a history of trying cases before the Supreme Court. If that doesn't tell you that there's an anticipation this one's going to go all the way to the Supreme Court, I don't know what does. So I think there's a long legal battle of how this thing will unwind. What I do know, Mark, is regardless of how it turns out, it's going to cause change in our industry.
Absolutely. Yeah.
And
It's the value proposition, right? Again, like all of this is making you have to be able to not only show value, but articulate value in a way that makes someone want to hire you.
Yep. So her encouragement here is be transparent and talk about commissions. And what does that look like? You're probably going to have some different conversations or more elaboration in your conversations at the listing table. You probably need to have conversations that you probably should have, but probably didn't have with buyers in the past around what actually happens with commission. I'm going to encourage you to go to Google. I'll just do it real quick and type in NAR 179 ways. And when you click on Google and find NAR 179 ways, pop up. And it's 179 ways agents who are realtors are worth every penny of their compensation. Now, this is not an all-encompassing list, but Mark, 179 points of value is a pretty great list to start with. So it's broken down from listing appointment to buyers. And where I want our focus and education and all our conversations in our organization going is, hey, Mark, what is your value proposition you're communicating to your buyers? And how do you talk about it? What do you have in writing that you're presenting to people around your value proposition? How are you taking your level of professionalism from amateur to full-blown pro? I would absolutely line up to pay you a commission because you're so good at it, right?
I think part of that too is being able to quantify what you've saved as a buyer's rep. What have you saved your buyers? Right? Like, can you say that on average, I help my buyers negotiate an average of, 6.5% off of the sales price between closing costs, price reductions, and repairs. So if you can quantify your averages and your numbers or have specific examples you can show people, they're going to pay 3% or more all day long, because they're going to save 6, 7%. And if you can demonstrate that, it's a no-brainer.
Yeah. And quite honestly, I'm excited about it, Mark. we've been a little lax in our, I don't want to be mean, but I'm just going to say it and then I'll clean it up later. We've been a
Mhm.
little lax around our professionalism as an industry in
Yeah.
some facets of our business. And it's just time to be more professional. It's time to go from amateur to pro. And it, for sure. Make sense? All
I
right. One
also,
one other article. Go ahead.
yeah, I was just gonna, while you're bringing up the other article, I would just say that like the days of presenting the buyer brokerage agreement as a document that gets signed right before you sign the offer are probably gone. You really need to have people hire you and sign a buyer brokerage agreement and understand the value proposition and how you get paid before you start your journey with them.
Boom. All right, Mark. I'm going to high point this article and then I'm going to ask you what your thoughts are. So it's saying weathering the storm Q3 earnings wrap up. So obviously, Inman tracks all the publicly traded companies and their financial reports, and I'll just hit them. Airbnb pulls in 3.4 billion in Q3 on strong international demand. So their international market is picking them up. Some of our competitors are bleeding cash right now.
Mhm.
The loan industry, Loan Depot, warns more layoffs are coming, but on a smaller scale. If
Yep.
you have friends in the lending industry, you're probably hearing about it. Like they're hurting.
Yeah.
Really.
They're not going to be paying for your lunch this
I'm
month.
begging. Yeah, they're begging for 6% interest rates. Um, the iBuyer market, OfferPad on path to profitability as net losses slid 75%. Open Door can't hang on to profitability in Q3. So iBuyers are hurting too. Redfin post profitable but falling revenue. Remax fifth consecutive quarter revenue line. Rocket, which is primarily mortgage but is also a little bit in the brokerage space, stayed
Mhm.
profitable in Q3 but still in the red for the year. VRO, parent company Expedia, reports best ever quarter. And
Mhm.
Zillow Q3 revenue ticks up, losses shrink despite rough market. So you've got the brokerage world, which is there's a lot of them that are bleeding cash right now. We're doing well, but our competitors are hurting. So the brokerage world in whole is hurting. Mortgage is hanging on by a thread right now.
Mhm.
iBuyers, which are pretty well rich in cash, but they're still bleeding cash, so it's not really going. Short-term rental, VRBO and Airbnb are thriving,
Mhm.
and Zillow's doing really well. What do you make of that?
Well, I think it's interesting. A couple of things I noticed in that, like most of these are put in terms of like their losses are getting smaller, not that they're growing their profitability. So in other words, they're still in the negative, but maybe they're less negative than they've been.
Yeah,
But a lot of that is because they've laid off a lot of people and they're shedding overhead. So
yeah,
that's one thing. And KW is a company with no debt. So we're consistently profitable as a company, and we're less profitable because we do have overhead and we aren't the first ones to just cut staff and things like that. But I think it just speaks to the market that fewer sales are happening, period.
yeah. But 15% predicted increase next year. Interest rates predicted to be between 6 and 7 by early spring. Um, should you not sell a house in fourth quarter? No, you absolutely should
Sell it now
because
if you
it
can.
costs you money to wait. It costs you money to wait. It won't cost you, there'll be no cost refis. So it's a no brainer. And how many times have you predicted things to go down to Terry's point and they went up?
Yeah.
And the cost of that. You just can't you find a good situation today and go for it.
Just remember, prices are not going down.
Yep. All right. Love you guys. Start and end on time. Thank you, Mark Jones. You're the best.
My pleasure. Thank you.
Bye.